We've got Mr. Pushan Sharma, the director at Crisil Intelligence, joining us on the show. Mr. Sharma, hi, good afternoon. Good to be speaking with you. And it's a very interesting report that Crisil has come out with. Let's start by decoding this report a little bit. The report highlights the impact of the West Asia disruptions on edible oil and LPG prices. Can you give us a sense how vulnerable is India's food inflation outlook to prolonged geopolitical tensions? Because just recently, as we were getting to terms with, favorable indicators coming in geopolitically, we've seen a resurgence of tensions once again. How are you looking at this and the impact it could have on food inflation?
Good afternoon. Thanks for having me on your show. Right. So right now, what we are seeing is that there is a dual impact, one of the conflict and the other of climate. So both of these are having a bearing on India's food plate. When it comes to the conflict impact, we're clearly seeing that both edible oil as well as LPG cylinder prices, they are inching up by 10%. And they have a meaningful share in the overall food plate cost, both for the vegetarian and non-vegetarian food plate. And that is propping up the overall prices. And on the climate front, we're seeing a clear impact coming in from tomato. There was lower planting for the summer crop, as well as there was impact on the yield front, and that has led to the arrivals being slightly lower than anticipated, which is pushing up tomato prices by about 31% year on year. Typically, the June, July, August period is a period where we see a spike in tomato prices. This is a slightly lean period. So that's what we are observing, both the impact of the conflict as well as climate on the Indian food plate.
And, Mr. Sharma, food inflation has remained elevated despite easing cereal prices. Are we entering a phase where perishables rather than staples become the primary drivers of household food inflation?
So if you look at food inflation last year, you would see that we were seeing negative print for about 6 to 7 months last year. So the base is also slightly lower. But yes, given how the monsoon progress is right now, June, we've seen about 40% lower rainfall than the normal. Then we've seen concentrated period of heavy showers over the last 10 days. Now, statistically, while that may seem that things are normalizing and things are coming back on track, but what seems statistically normal is not a normal from an agriculture standpoint. And which is why we believe that there could be some pressure on the yields. And if that materializes, then there could be pressure coming in from the agri commodity prices in terms of inflation. However, the stock position across multiple crops and specifically paddy remains comfortable. So we're not seeing a lot of vulnerability there, but definitely where we have linkages with the rest of the world, specifically edible oil complex, about 60% of our requirement gets imported. We may see spikes there, more from the conflict front than the climate front there.
Understood. And, basis everything that we're seeing on the food inflation front, how do you believe should policymakers interpret this rising thali cost when core inflation by itself is, relatively benign? Does this call for a different policy response to what we're seeing actually play out on ground?
See, the policy response is being calibrated. What we are seeing is that the government is assessing the vulnerability. So if you look at, Ministry of Agriculture's assessment, out of the 750 districts that we have in our country, about 377 of them are in the deficient category. Within that, if one double clicks that, we see that there are about 111 districts that are most vulnerable. And the reason for that is not only is rainfall deficient in those regions, the irrigation cover there is less than 25%. So I think the policymakers are looking at this at a micro market level, looking at what is the advisory that could be provided to those markets in terms of short duration crops and weather resistant crops, things like that. That is where the policymakers are focusing their attention on right now. From a slightly macro perspective, if we look at inflation and the policy response to that, right now, as we see it, we still see that the inflation is expected to be in RBI's comfort range of around 2 to 6%. In case the monsoon does not progress well further, August and September will be very critical months. These are months for vegetative growth for the crop. If monsoon keeps catching up and it has covered the entire country by yesterday, and that is just a delay of 1 day as per the normal situation. So if the progress goes on normally, then things should not be, there should not be an alarm bell. But there is a monitorable, and that is that August and September are likely to see slightly lower rainfall. El Nino conditions are likely to further catch up. And if that happens and the impact on the yield is even more significant, then there could be more than anticipated pressure on the prices. We're not anticipating that at this stage.
Projection you have on that number, because we've seen monsoons improving slightly for a few days in a row all over the country, and then once again it's become really hot in terms of temperature. What impact do you think this is going to have on kharif sowing? If you can give us any outlook that you have on the food inflation number for August, September.
Right. I can maybe talk about the sowing and the crop dynamics. And there, from a sowing standpoint, what we see is that because the reservoir levels were strong more than the long period average, that and the irrigation cover is about 56%. So our vulnerability has reduced over the last decade because our irrigation cover has also gone up. So from a sowing standpoint, we're expecting sowing to be slightly at the same level as last year, or slightly above that. So we're not anticipating so much pressure on the sowing front. But yes, on the yield front, we could see some impact of around 2 to 3%. Crops that could be vulnerable could be cotton as well as soybean. We could see some impact there, and paddy on a low base. In fact, last year we had a decline in paddy production because of damage on the yield front. On that low base, we could see another impact on the paddy front on the yield side. So while the sowing sentiments are reasonably good on the yield side, because of the crop damage as well as going for short duration varieties, we could see slightly lower yield, which could feed into the food inflation number to some extent.
And lastly, Mr. Sharma, if you can help us understand, vegetarian thali costs are increasingly being influenced by supply side shocks. Does this suggest India's food inflation is becoming structurally more volatile, and how are things shaping up on the supply side?
Right. So the food plate has traditionally been influenced by the supply side. If we look at most of the constituents of thali, they are staples, the demand for which does not show too much volatility. It grows almost at the population rate, barring, say, poultry, where the demand would grow marginally higher than the population rate because of a lower protein penetration in the country. So this has been supply led. And in the foreseeable future, in the near term, we expect that to be again, supply driven. But from a supply standpoint, some of the crops that need to be watched out for, the vulnerable ones, that is tomato, onion, and potato. If we look at tomato, the price has shot up by about 31% year on year in the month of June. In July, August, we expect this to continue. There could be some relief coming in from September onwards when the kharif supplies come in. A lot will again depend on monsoon, how that progresses. On onion side, the rabi season production has been lower, and that feeds into 60% of our requirement is met from the rabi season. So that supply has remained low because the prices were lower last year. Farmers went, the sowing reduced for the rabi season. Going ahead, the kharif season, if it progresses well, we could see some support coming in from the onion crop going ahead, but the prices are expected to be moderately higher on the onion side. But tomato is what we believe could prop up the prices in the near term over the next couple of months, along with edible oil and LPG cylinders.
Watching out for some of those commodities. But on that note, Mr. Sharma, thank you so much for your time. Good to be speaking with you today.
Thank you.